What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit notification bells so you don't miss future videos. So a lot of you guys asked me about NLY stock. Is it a buy? So I'm going to review these guys. I'm going to do an in-depth review with these guys. I'll do a stock analysis and dividend stock analysis, and I'll provide my rationales at the end. Now again, this is not financial advice, for entertainment purposes only. Disclaimer in the description, but we'll see if these guys are the real deal or if they're a joke. So you guys have been amazing on my YouTube channel. I know I'm recovering from the bug. It's been a month and finally I can start breathing. But this stock is very interesting. There's some interesting news regarding these guys. So let's check this out right now. So NLY, or Annually Capital Management, is sitting at $16.64. So in 2017 when they started, they were right at $49.16. Then right around the pandemic, they got hit hard. See a significant drop. And they dropped to $24.52. And then they went up for a little bit of a rebound, 2021. And then they dropped. But there's a few things that are a little bit of a red flag, which I'll go over. One, the decrease in price per share. Two, that is a high dividend yield at 21.15%. So the PE ratio is 1.65. The average volume is 15.29 million. Market cap is 7.40 billion US dollars. Year range is 1511 to 3516. Is it? Day range 1663 to 1741. Its previous close was $17. So let's review these guys as a company first. So going on their website, Annually Capital Management is a leading diversified capital manager with investment strategies across mortgage finance. So they look like an mREIT, mortgage-backed real estate investment trust. So proven over 20 plus years to provide sustainable yield for shareholders, we are strive to deliver investment returns throughout the market cycles. Our diversified investment strategies include agency mortgage-backed securities, mortgage servicing rights, and residential real estate. With $11 billion in permanent capital, we are the leader across residential mortgage finance market. Annually is elected to be taxed as a real estate investment trust among the world's largest REITs. So when 90% of what they make have to go back to investors. That's kind of like the terminology of a real estate investment trust. They have $82 billion in assets and a 20-plus year history, but we're going to look a little bit more into these guys. So their principal business objective is to consistently generate net income for distribution to its stockholders and optimize its returns through prudent management of its diversified investment strategies. Our portfolio consists of securities, loans, and equity in the mortgage finance market. Now right here they have $11 billion in permanent capital and $82 billion in total assets. We're going to look a little bit more into these guys. So their capital allocation across businesses, so their investment options and robust capital allocation process combined with careful risk management enable us to rotate into the asset class on a risk-adjusted relative value basis to take advantage of market dislocations as they rise. 71% is agency, 14% is residential credit, and 15% is mortgaging servicing rights. Let's look a little bit more. So here's their revenue in 2015. This is in millions US dollars. 1,135. 2016, 2,339. 2017, 2,808. 2018, 2,279. 2019, 882. Whoa. 2020, you can blame the pandemic, 203. Then 2021, 2,836. So I'll go over recent trends. So June 2021, the revenue was minus 235.11 million. Net income minus 295.64 million. September 2022, the revenue was up. September 2021, the revenue was 1.77 billion. Net income was down 519.24. Net profit margin was down 29.35. Earnings per share was 1.12. December, the revenue went down to 522.24 million. Net income went down 52.64%. Year-to-year change, 415.48. March 2022 revenue went up 2.10 billion, and then net income went up 2.02 billion, net profit margin went up 96.28. Then June 2022, year-to-year change, it went up 505.20%. Net income went up 866.70 million. Net profit margin went down to 90.97. Earnings per share is 1.20. Now, let's go over their dividend history. Let's start in 2009. It was 60 cents, then it jumped to 69 cents, then 2010, 75 cents, then 2010, 65 cents, then 2010, 68 cents, then 2011, 64 cents. So we're seeing a little bit of inconsistency of dividend growth. 65 cents, then 60 cents, then 57 cents. What is going on here? 2012, then 55 cents, then 50 cents, then 45 cents, then 40 cents, then 2013, 35 cents. So you see a decrease in dividends, and then 30 cents, and then it stuck at 30 cents. And you got that little special dividend where they just added like 4 cents. Then it's still 26 cents down to 30 cents. Then 2018, 22 cents, then 8 cents to make up for something. So it's 30 cents, then it goes to 25 cents in 2020, then to 22. Then everybody's saying, why is it 88 cents? So we're going to go over that real quick. So on September 8th, 2022, NLY announced that its board of directors unanimously approved a reverse stock split of the company's common stock ratio of 1-4. So you see the price on Google. Think of that as a little bit multiplied by 4 or divide by 4. That's what this price was before the reverse stock split. So it became effective following the close of the business on September 23rd, 2022. And the company's common stock began trading as a post-reverse stock split basis on September 26th. So they're trying to rationalize why they did it. So a reverse stock split exchanges a fixed number of existing shares for a smaller number of newer shares, resulting in the newer shares having a higher price. So it's trying to attract investors. So a ratio of 1-4, every 4 shares of annually common stock were automatically converted into 1 share stock, and the stock price initially increased proportionally. So they just provide an example. So this is what they're trying to rationalize. The company implemented the reverse stock split with the objective of reducing number of common shares, the outstanding, to more closely align with companies' similar market capitalization. Furthermore, the company believes a reverse stock split will make a common stock more attractive for a broader range of investors, which has the potential to reduce the share price volatility over time. Already, that's looking to me like a yield trap, and that's damage control. So how does the reverse stock split impact common stock dividends? All future dividend distributions will be made at the discretion of our board, will depend on our earnings, our financial condition, our maintenance of our rate status, and such other factors that the board may deem relevant from time to time. So this appears to be damage control. It's like IVR. You know, I loaded up on IVR because I knew this could potentially happen with a reverse stock split. And you know, it could be good, it could be bad, but this appears to be a major yield trap. A high yield percentage always indicates a yield trap for newer investors because they see, oh man, it's a high yield. And guess what happens? Start seeing dividend cuts over time. You see the trends over time. There were cuts or reduction of the dividend trends, as I showed you. So this stock I am not touching with a 10-foot pole. Now, if you got it during the pandemic and you're holding on to it and just reinvesting the dividends, that's great. But I don't see any dividend growth. I think these guys are in damage control to try to fix their reputation, and they don't want to get delisted. That's my honest opinion. Again, this is not financial advice for entertainment purposes only. Disclaimer in the description. This is my perception of what I see. This is not what they plan on doing based on what that's saying, but I just see that as them being in damage control and people dropping them very fast once they realize that they're a yield trap and they're a waste of their time as an investor. So these guys are in damage control. They're doing what they can to try to fix their reputation, and a reverse stock split is always bad if you ask me. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Start Dividend. You guys have a good one. Now I have a video posted for tomorrow.